Okay, people are still entering the room, but we'll go ahead and get started. Thank you all for joining us this morning on Election Day. Happy Election Day. We're happy to have you here. We hope you are getting ready to vote or have already voted. But in the meantime, we're going to talk about the election impact on M&A. Looking forward to getting to that discussion. But before we do, a couple housekeeping things that we'd like to get through. For those who do not know who I am, my name is Lena Dobreer. I'm the Director of Operations with Opus Connect. We are a lower middle and middle market M&A focused organization. We're membership based. Our members primarily consist of private equity firms, investment bankers, lenders, independent sponsors. We have chapters in LA, Chicago, and New York, where we'd be in person once a month in each of those markets doing a panel or a roundtable of some sort. But now everything is virtual. And in addition to those monthly roundtables and panels, we do deal sourcing events all around the country, again, virtually now. But we pair up capital providers and investment bankers and capital providers and independent sponsors for one-on-one meetings. Many of you are participating in our investment banking Deal Connect after this. So looking forward to that as well. If you guys have any questions or just want to learn a little bit more about Opus Connect and how we can support your business development needs, feel free to reach out to my colleague, Jacob Zeffrin. His information is down below here, and he'd be happy to answer any questions that you have. A quick note about questions. Our panel will be fielding live Q&A today. So as questions come to mind, please do not use the chat function. Use the Q&A bubble at the bottom of your screen. You'll submit your questions there, and our moderator, Steve, will be monitoring those, and we'll get to as many as we can. Of course, these events would not be possible without the support of our sponsors, so I definitely want to give each of them a moment to introduce themselves briefly. Focus Search Partners, I know Steve couldn't be with us this morning, global executive firm, executive search firm. If you want to learn a bit more about them, their information is here. His contact information is below. Moving on, we have NFP, longtime insurance partner in New York. Duncan, I see you here. I'm going to go ahead and unmute you so you can introduce yourself and your firm.
Great. Thank you, Lena. Hi, everyone. And, thank you first and foremost to Opus, team over at Opus for hosting and kind of being a valuable partner over the past number of years. We, at NFP, we are an insurance broker and consultant focused on the middle market. We have grown now to 6,000 plus employees, 350 plus offices, and grown through acquisition for the most part. Our background and focus on private equity firms and their portfolio companies comes from, the experience of being private equity owned. And we are owned by Madison Dearborn and have been for a number of years. And so, we see the value in those types of partnerships and have a good understanding of the expectations of a private equity owner and bring those solutions to other private equity firms in the space and work alongside, bankers and accountants and other service providers and, working everything from, we have a full kind of M&A and transaction advisory team. And we support due diligence, we support kind of cross-portfolio work, and support all the necessary kind of policies and reviews that need to take place. We're also doing a lot around transaction advisory, so rep warranty and other coverages. But that is all kind of at a high level, and we'd love to, if anyone is interested, kind of tell you more about what makes us different in the space and what we're seeing in the market. So thank you.
Great, thank you, Duncan. Moving on, we have Witham. I know Matthew Barrett, you're in here. Go ahead and unmute you. Please introduce yourself and your firm, sir.
Thank you, Lena. My name is Matthew Barrett. I'm a business development executive at Witham. We're very happy to be sponsoring our 4th Opus Connect event. I'm in the process of setting up several meetings with several of you, but I'll give you some general information on Witham. Witham is a top 20 accounting firm with offices in Boston, New York City, New Jersey, Philadelphia, Washington, D.C., Orlando, and California. I'm here today to represent our transaction advisory team and forensic valuation team. Steve Brady, who leads our transaction advisory team, will be presenting today during the break at 3 p.m. Several services that we offer that can assist complex issues regarding mergers and acquisitions are quality of earnings reports, purchase price allocations, business valuations, portfolio valuations, fairness opinions, tangible asset valuations, field exams, cost segregation studies, and transfer pricing studies. Thank you, and looking forward to connecting with you all after the conference.
Thank you, Matthew. I want to acknowledge Lowenstein Sandler here. They have been a longtime sponsor and supporter and partner of Opus Connect. If we weren't doing this virtually, we'd be in their offices in New York. Steve Siesser of Lowenstein is actually moderating today, so we'll wait until we get to the panel to introduce him and the firm. Before we do, we have a poll question that we'd like to ask of you. This will give us a better understanding of who's in the audience and who we're speaking to today. So we'll go ahead and launch that poll. And you can just submit your answer. We encourage your participation. Independent sponsor, investment banker, capital provider on the debt or equity side. Let us know who you are. We'll give it 20 seconds here and then we'll get to the discussion. Great. So it looks like 6% independent sponsor, 39% investment bankers. I'm sure many of you are doing the one-on-one meetings afterwards. Some capital providers on both the debt and equity side, and some of our sponsors as well. Thank you guys for your participation. And without further ado, I'd like to introduce our moderator today, Steve Siesser of Lowenstein Sandler. Steve, go ahead and take it away.
Okay, well, good morning, and first of all, thank you, Lena, and thank you to Opus for arranging today's panel and today's event. I am Steven Siesser, of partner at Lowenstein Sandler. We're a firm of about 350 lawyers based in New York City with offices across the country. We focus mostly on transactional and litigation and bankruptcy, but overall a full service firm. But a lot of what we do is focused on funds, ranging from hedge funds, private equity funds, and venture, and basically doing all that funds need when it comes to raising their capital, compliance, and then deploying and recovering their capital. That's usually the roles we play in. But very excited to be here today. We have a great panel with a very, very timely conversation, and that is what the panel believes will be the impact of today's outcome on our work going forward in terms of M&A. So what I'd like to do is introduce each of the panel members, and I'll start with Dan Lee from COMVEST.
Hey, thank you, Stephen. Dan Lee with COMVEST. I'm a partner on the lending side of our business. We're a private equity firm based in West Palm Beach. We have a control equity strategy that's about $1 billion, and our lending side, we're a little bit under $4 billion. And we actually have a third strategy we began since COVID, which is investing in junior capital in businesses impacted in COVID. So think physician practice management, brick and mortar retail, travel and tour businesses, hospitality. So we're investing all over the capital structure and also investing in businesses that are dealing with the hefty challenge that is COVID. So welcome a chance to be here, and thank you. And I'm a little terrified that this is being recorded as we look back at what we say now, but we'll find out.
Okay, thank you, Dan. Next, I'd like to ask Patricia Stensrud from Avalon to say a few words.
Great, thank you, Steve and Opus. I'm a managing director with Avalon Net Worth. We're a boutique investment bank serving really specializing in middle market companies, growth capital in particular, and we are industry agnostic.
Okay, and thank you. And then next is Patrick Floeck from Valesco Industries.
Hi, thanks, Steve, and good morning, everyone. Patrick Floeck with Valesco Industries based out of Dallas, Texas. We're a lower middle market private equity firm, SBIC fund. Therefore, we invest equity as well as subordinated debt into lower middle market, mostly founder and family run businesses. They're looking for that kind of first influx of institutional capital. They're looking for a partnership to really enhance the enterprise value of their business and take it to that next stage of growth. Fairly agnostic in terms of what we focus on. It's mostly old economy, manufacturing, distribution, business services, but happy to be here and fun topic to discuss. What I can tell you is I am definitely not qualified to tell you what the results will be, but I can give you my opinion on the matter. So hopefully you enjoy it.
Thank you, Patrick. And rounding out the panel from Middlemarch is Sasha Grutman.
Good morning, and thanks, Steve, for this opportunity. I'm one of the two co-founders of Middlemarch Partners. We are a boutique merchant bank that provides both advisory services for companies looking to raise growth capital, as well as companies looking to facilitate growth buyouts. And we focus specifically on two important niches in our global economy: financial services and business services. And specifically within financial services, we are particularly focused on non-bank financial services, fintech, financial software, specialty finance, and transaction processing. In business services, we tend to focus on outsourced business services and technology-enabled services. We've raised over $1 billion for our clients, and we also co-invest selectively alongside leading sponsors like PIMCO and Waterfall Asset Management in some of the deals that we bank. We are absolutely seeing some interesting shifts in the business mix, especially around M&A now that we're in this COVID period, and we'll be talking about it during the course of our conversation today.
Great. Well, thank you, Sasha. So why don't we get started? Let's talk about setting up sort of a benchmark for today's conversation. I'll put this question out to all the panelists. How have you seen M&A recently in terms of, has it been robust activity? Have valuations been higher or lower? Are there any sectors that have been harder hit in the last 6 months or 12 months, COVID related, not? Any successes? Patrick, why don't we start with you?
Yeah, sure. So I think everyone kind of saw that right after COVID happened, M&A activity just kind of shut down. I think everyone was just kind of waiting to see how long it was going to last, what was going to be the impact, what industries it was going to impact most. And then we kind of got into the summer where, it's usually a time for vacation and, activity was starting to pick up a little bit, but things were largely still on pause. And it seemed like September 1st hit and everyone just said, this is going to be around for a while. We've got to go to work and get some things done. So we really saw a lot of activity ramp up right around September 1st with a lot of deal flow over the last couple of months. With the resounding response from both business owners as well as advisors saying that a lot of people are nervous about what the impact of the election could be and want to go ahead and get something done by the end of the year. We're currently working on a deal that we're going to close here in the next couple of weeks. I think we've looked at a lot of things where people are saying, look, we're trying to get something done by the end of the year because we don't know what the results of the election will be. And even with whomever takes over control of Washington, we don't know what the long-term impacts will be. So we've seen a lot of activity. I think at this point, we're not seeing a whole lot of new things come to market. I think a lot of people are working on things, trying to get them done by the end of the year with a lot of pitch activity and new opportunities that'll probably be coming to market after the first of the year. But that's kind of what we've been seeing so far.
Okay. Patricia, what about you?
I would echo what Patrick said in terms of the timing. In the July-August timeframe, I think a lot of our activity switched more into the debt side of the business. It's probably understandable. But overall, we haven't had any deals fall away in terms of capital raises that we're working on. We have a lot of interest among capital sources. It's just taking longer. The process is elongated right now, probably for lots of reasons, but definitely saw an uptick starting, I'm going to say, in mid-August. And then after the Labor Day, I think everybody did decide it was back to school time, get back in the trenches, and so it's quite active right now.
Great. Dan?
Yeah, no, I think there's a really interesting inflection point in April. Talking to bankers in May, a lot of bankers would say, look, there's no more M&A activity for the year. There's too much uncertainty with the election, with the economic impact of this and COVID. And in August, the bankers that were brave enough to sort of stay in the market were getting deals done. And the bankers started getting word out that, look, deals are getting done, capital wants to go to work. And it's a little bit of a binary world where if you're a good business at minimum COVID impact, there's very strong interest for you. So both in the M&A side, so multiples are very high, and the financing side. If you're a business that's struggling with COVID, generally it's very, very challenging. But I think just one data point in the capital markets front, the capital markets are open and nearly as aggressive as they were a year ago in terms of multiples and pricing. And interesting recent data point, second lien activity had been dead for about 6 months. It started roaring back about 2 weeks ago. That's an indication that risk is starting to price again. And I think that's going to continue.
Interesting. And Sasha, what about, what are you seeing? What have you seen?
Well, I think I have to borrow a line from Charles Dickens. It was the best of times, it was the worst of times. I think for the larger companies in sectors where they're growing, and specifically in my industry, in some of the transaction processing area, there has been tremendous opportunity to acquire big assets at big valuations, a la what Dan was saying. But there's a flip side. If you're a growth company or you're an emerging growth company, it's become much harder. And building on Patricia's comment, there is a COVID discount that makes it hard to affect M&A in a market where it's not obvious that you're a shining winner. So I think there's really two markets, and it's been harder for the emerging growth companies than it has been for the kind of unicorns in the market that are obvious candidates for M&A.
Yeah, and I'd say we've seen sort of a mix of activity, at the firm among the different asset classes. I think May was when folks started poking their heads out of foxholes and started looking around, and deals that had died, that were underway, at the beginning of the year, in early March, started coming back, and we started getting, ramping up with activity, and things started closing. Transactions started closing in, end of July and then August, and now we've got a couple of very, very large, couple of multi-billion-dollar deals in house, and everything from on down. So there's definitely a lot of money out there, still looking to get put to work, and I think no one seems to be afraid too much yet of the election, but we'll see how that changes. And should they be? Patricia, what do you think? What does history usually tell us about the impact the presidential elections have on M&A? What have you seen there?
Well, first of all, I'd like to just share a statistic I read this morning saying that the P&E, private equity community, has made contributions, political contributions in this election vastly above their record-breaking contributions in 2016. They contributed 170 million versus 116. So we're definitely being counted in the action this time around. But going back, there's a confluence always of situations that overlay with the presidential election timing. So for example, in 2000, we had strong M&A leading into 2000. Cycle was disrupted by the burst of the dot-com bubble, as you may recall. We're all trying to forget that. And then that cycle kind of bottomed out in 2003, where it started a new cycle. So then we get to 2008. And again, in 2008, we have prices helping us along. So strong M&A leading election cycle, same cycle, which began in 2003. And this cycle only bottomed out after the worst of that recession passed. In 2012, we also had strong M&A activity leading up to the election, record levels of dry powder at that time, and the cycle continued to expand both in transactions and deal sizes. 2016, strong activity leading up to the election. M&A was actually achieved its highest level in a decade. Since 2018, while strong, activity has steadily declined somewhat. So that brings us to 2020, where we have, of course, now the evolving ramifications of the global pandemic, both economic and social issues. Second quarter bottomed out this year for PE, rebounded back into, or M&A, I should say, rebounded back in third quarter to pre-COVID levels, and is strong, as we've all just said, heading into the direction. So I think one of the things that this tells us based on history is that election outcomes are really only part of the equation. There are so many other factors and bigger factors at work. And yet, in spite of the combination of events surrounding this election, we've got well over $1 trillion in dry powder, as someone said. So there should be plenty of life left in the cycle. We'll see where it goes.
Thank you. Very, very, very thorough review of the last 20 or so years of activity and election impact. Appreciate that. Now, the one, I guess, as we look at today's election, and we look at the candidates and what each of them, their views on the economy and business going forward, do we think that there are any sectors in particular that would flourish more under either a Trump or a Biden administration? Sasha, how would you look at that? Oh, I think you're on.
Here we go. I think if we start with President Trump, I think he has been a very consistent, he kind of telegraphs his position. So I think you're going to see the conventional energy sector get a big shot in the arm. I think he's strong on farming, and he wants to encourage farming to try to address some of the shortfalls in international trade. I think he tends to support bigger deals, except in the area of megatech, the FANG stocks, where there's some sentiment against them. But I think his industries are the ones that he's been supportive during his first administration. I think with Biden, Biden is going to be focused on a couple of things. He's definitely more interested in everything green, so green tech, alternative energy. I think he's going to focus on things that employ people, so construction. And I think he's going to be very interested in saying something about the training and education sector as a new area for growth, both for jobs and for helping retrain people. So I think you're going to see more enthusiasm for those sectors.
Well, thank you. And Dan, I guess what's your view on the industries or the areas that could be impacted by a blue wave?
Yeah, I would just point out if people are tracking the market, the pundits are saying this isn't a prediction, that the market seems to be pricing in a blue wave with the roar today. We'll see. I have no idea, but I think if it does turn out to be a blue wave, I think there are the industries that will see the most change are the ones that benefited from the deregulation by Trump. And so it's areas like oil and gas and energy, as Sasha said, industrial sector for sure. The other one that we think is interesting, and many of those are stroke of the pen, by the way. Trump proved that they're stroke of the pen, and Biden will likely prove, will be undoing them the same way. The one that's a little more moderate term is the financial services and specialty finance, the CFPB in particular. That was largely neutered under Trump after it had gained some momentum with Obama. And we think that's an area that will become probably an area of pretty tight focus, especially if Senator Warren has a position in the cabinet, which seems likely. And so I think, our view of that is we're very active in that sector. We're not fans of increasing regulation for the sake of regulation, but I think there has been predatory behavior in that industry. And so we welcome the ability to sort of clean up some of the bad actors, or I should say kick out some of the bad actors. And we've been very careful about how and where we play generally. So we think generally regulation, we're favorable on regulation in the space because we think it frankly spooks other players to some degree because they don't understand it as well. We've been in it for 20 years, and so we feel like we've been playing in the parts that will benefit from regulation. But I think that's an area you will see a significant change.
Yep. No, I think that there's some logic to all of that. You know, I want to go back to something Sasha mentioned about infrastructure and you know, Patrick, I'd love to get your views. Do you think, you know, a large infrastructure initiative under Biden that would boost the economy would help or hurt M&A? You think it would drain money from M&A activity or bring it in, or what's your view?
Well, listen, I think infrastructure has been a large part of both the Trump administration over the last 4 years, as well as what Biden's campaign has been about. So I think it's on the agenda for either administration. And I think it absolutely will help the economy. I think the way each administration goes about it will be drastically different. I think Trump will be pushing much more towards private infrastructure initiatives, whereas a Biden administration will be much more based on union type job creations. But either way, it's going to support all the ancillary businesses that are supporting those infrastructure projects, which I think absolutely is going to help M&A, just because it creates certainty in the area. We at our firm have taken a pass on a lot of businesses that are heavily focused in supporting infrastructure projects, just because there hasn't been any sort of level of certainty around where the budget is for it and what sort of funding it will receive. But I think with either administration, you probably get to see some sort of certainty around it that would allow for investments to be made into the space, especially, again, those ancillary companies that are supporting those types of projects.
So Patricia, do you see any other specific sectors that would be impacted by one outcome versus the other?
The only one that I do think, and I don't know that this is it's not an industry sector, but companies and sectors that are dependent on China, highly dependent on China, have been at risk in some of the trade negotiations in the Trump administration. It's not clear whether Biden would roll back any of those tariff agreements with China, but I do think there will be a different tone there. However, I think that it's been a wake-up call for companies to realize they can't really be totally dependent on one country and a single supply chain. So I think that will create some opportunities for redirecting where some of that action goes and the funding that's required to do it.
So I wonder, though, you know, as you point out, China, it sounds like it could be an area to avoid you know, for investors going forward. Are there other areas, though, that you think would be ones to avoid? Dan, I don't know if you have a view on that, you know, areas to focus or avoid depending upon what the outcome is.
Yeah, so I think, look, we're going to do what we did when COVID hit, which is generally keep our heads down and keep trying to find places to put money to work. I remember in April calling around to people who were saying, "What are you calling around for? There's nothing happening." And I think might have thought I was calling for a job, and frankly, but you know, maybe there's a contingency plan there. But I think our view is we stayed active through the summer as other people were on the sidelines, and not because we're smarter, but we just felt like we were finding deals we liked. And so in terms of sectors, I think one that we're very active in is healthcare. And I think our view is that we're going to be very active in healthcare on the other side of this. I think I would anticipate an expansion of Obamacare and some of its you know, kind of key tenets. There will be sub verticals that will be favored and some that will be damaged. But I think generally it's going to be a rising tide that will lift healthcare in general under a Biden administration. That's what we anticipate. So not making sector-wide bets, but liking the tailwinds generally over the course of the next 4 years.
Well, that's interesting. It's sort of a shift in focus to how, you know, we talk about what sectors and what industries may be impacted, but what about investors? I mean, you know, Patrick, how do you think the election is going to change, you know, the strategy of investors, given particularly the amount of capital that's out there? What do you see on that?
Yeah, I mean, one thing's for certain is that M&A activity won't go away. You know, there's so much capital currently in this asset class, And whether there's a change in taxes or a change in foreign policy with regard to trade and tariffs, I think investors are smart enough that they're going to continue to find areas where they can put their capital to work. We have a company that, because of the China tariffs that Patricia was alluding to, we have over the course of the last few years, moved all of our manufacturing and sourcing away from China, invested significant dollars, which has created a competitive advantage for us because we can source it faster, we can source higher quality material, and we're doing it for the same, if not a lower cost to us, which is creating a competitive advantage. So if that goes away, if that's unwound, how does that impact the way that people view the world? I think, one thing that's very certain about, this industry, specifically private equity, is that wherever we are today is drastically different than where we were 10 years ago. And 10 years from now, the industry will be very different. We're constantly progressing forward and looking at new ways and new strategies to define this asset class, because if not, it becomes a commodity. And this is an industry that I think has enough smart people and enough innovation in it that it likely won't become a commodity.
It's interesting. I always talk to clients when they're about to engage in a sell side activity or a looking for an investor. I will say that not every fund's money is the same color green, meaning that some funds, an infrastructure fund will be a lot more helpful to a company that's in the infrastructure sector versus, a TMT target. I think you're 100% right that funds will always have to continue to distinguish themselves, right? They can't, otherwise cash is just a commodity. But switching a little bit, we've talked about investors, we've talked about industries and companies. What about transaction types? Patricia, do you see transaction types being impacted by the election?
Well, to the degree that there could be tax implications on the horizon with one candidate versus the other, it could have a little impact on how some of these things are structured. I think vertical integrations for supply chain control, again, will be a defensive measure. I think also that industries with COVID themes, tech, logistics, biopharma, will be areas of focus. But in terms of transaction types, I don't know that I see a great deal of difference. I expect SPAC will continue to have the run that it's enjoying. But beyond that, I don't really see a great deal of change in structure of transaction type.
Well,
Steve, if I can add an element to that perspective, just from the lower middle market standpoint, especially those that where we're transacting with, business, family and founder run businesses, what we've seen over the last few years, especially as transaction multiples have increased, is a lot more rollover equity. And I think that if you were to encounter a blue wave with the anticipation that capital gains taxes are going to increase, I think you see a lot of M&A activity in the near term over the next 12 to 18 months to get out ahead of when those effects will actually take place. And I think you likely see a lot less rollover from sellers. That's something that's been a big part of how these higher multiple transactions have been accomplished, especially from these founder run businesses. And I see them trying to take as many chips off the table now as they can.
Yeah. Well, from a buyer's perspective, how do you all feel about that? Maybe Dan, you're going to talk about this. How do you feel about less rollover from your founder?
So I would say we generally discount rollover, not because it's not real value, but we're really concerned about the new money that's coming into the business from an independent party. So rollover and seller notes can be fine. They can also work against you as a lender, where I can give someone some leverage in a negotiation if they're important to the business, a seller note in particular. But I would just add, so we frankly wouldn't trouble us. I think less structured is generally better. It's cleaner. I would add one comment on maybe not transaction types, but volume. The bankers are already stoking the fires. They're very actively sending examples of the math behind what you need to get to make X today and what you need to get to make X after a tax change. And so, in other words, pushing people to sell their businesses early, even if it's for a lower multiple. And so they are, that if we do get a blue wave here, they're going to be on CNN, CNBC, you name it. They're going to be screaming from the mountaintops. And I think next year, between a combination of pent up demand, people wanted to get out ahead of that tax change, and frankly, a lot of businesses that have been hit by COVID, starting to kind of get to a point where they can think about raising capital and be opportunistic. I think next year could be a very, very big year M&A wise.
I agree.
So let's segue now to talking about specific things that will change, or certainly we're expected to change, depending upon the outcome of the election. I think Patricia, you were the first one to mention taxes this morning. Why don't we stay with taxes, and what do we see? Patrick, you also alluded to a change in rollover. What do we see the different tax policies? How do we see those affecting M&A? Is it beyond rollover? Is it just rollover, or is it valuation? Is it what do you think? I open that question.
Is it open to everybody?
Yeah, to the group.
I think Steve, I think it's pretty obvious that there's a philosophical difference between President Trump and Vice President Biden. Donald Trump wants to lower taxes at every opportunity, and Joe Biden has made a pretty strong commitment that for people who are probably in the worlds that we deal with are going to earn over $400,000, their personal taxes are going to go up, and corporate taxes are going to go up, and estate taxes are going to probably go up. So the big issue is, to the point that Patrick was making earlier and Dan was also alluding to, if you can slip a deal, if you're a founder and you want to get out of this and maximize your gain, you should clear these transactions out as fast as possible. But once the dust settles on whoever is in place, it's kind of a level set for everybody. You're going to deal with the tax treatment that you're presented with at the time. And I think that I really don't think it's going to have a huge impact once that date comes. You're going to decide whether you want to sell or you're not. I think the bigger issue is really going to be for a very small sector of basically family-run or privately held companies where they're looking to cash out. And I think the good news is people like Dan are willing to cash them out totally, and they can take their winnings and move on to something else. But I think there are a lot of private equity investors who have historically said, we really want to see that rollover. We want to see the management recommit. And I do think we're going to also be facing a lot of situations where companies have to basically be restarted. I mean, the leisure industry, specifically restaurants, are going to basically have to have a complete reseeding of an industry when so many of them are going to go out of business. So I think the COVID overlay over this election cycle is probably as important, if not perhaps more important, to like, what are we going to be investing in? Because there are whole industries that need to be repotted.
We did get a comment from the audience. I'll just read it. I'm not sure it's a question. I think it's more of just an observation that the perception is that areas such as entertainment, travel, hospitality, and food service as sectors will need government assistance. And it appears that those are some statistics that were shared, or some information shared from the U.S. Chamber of Commerce. And so government regulation is something that also, and I think that's what you were alluding to. But staying with the regulation topic, I guess, Patricia, maybe turning to you, is there a particular regulatory implications or threats that could play out as a result of the election?
I don't think she heard you.
Sorry, I froze out there for a second, Steve.
Okay. Sorry, I had asked if there's any particular regulatory implications or threats that could play out as a result of the election.
Well, a couple. We've talked about the taxes, whether it's corporate taxes, capital gains, and then also the global intangible low tax income going from 10.5% to 1%, potentially, which could back into the U.S. Also, another potential regulation is, what I read, interestingly enough, is that the threat of stimulates, but that could have some effect. And then the financial regulation that I think we talked about earlier, someone mentioned, and maybe even taking a tougher stance on the enforcement of Dodd-Frank, as an example. So I think that there have been a lot of signals from the Biden side of the equation that some of those things are up for grabs.
Well, and what do you think about the Fed, Patrick? What impact do you think the Fed's decisions on keeping interest rates low will have on financing as it relates to M&A?
I mean, I think it's going to prop things up for a while. I think it's going to keep financing options open, especially in the near term, as people, Sasha alluded to, trying to get things done before any sort of true tax effect takes place. Listen, I firmly believe that no matter who becomes president and who has control in Washington, I have a belief that COVID is the #1 priority. And I don't think you're going to see any of these large scale regulatory shifts or changes if Biden were to be elected to happen before COVID were solved. I think that's the primary focus, or at least I hope it should be. So I think you have some time, and you'll start to see some canaries in the mine shaft as to what the potential regulation shifts will be. And I think you'll start to see some industry changes that will allow to kind of mitigate that a little bit on the M&A side.
Yeah, Steve.
And also, Steve, what we haven't talked about, but I think it's implied, is that a lot of these changes in regulations will require considerable legislative support. So who gets control of the two houses of government will be equally important.
For sure.
That's a huge point. I mean, if Biden wins the election and the Democrats maintain control of the House, but the Republicans maintain control of the Senate, you're not really going to see much get done at all, at least for the next couple of years.
Right.
Well, I think this is bringing up a very important point, at least in my mind, and it goes to this fact. We talked about leisure industries being basically dislocated, and we've got all these unemployed workers. And I think to allow sort of market forces to recalibrate is going to take too long to get these people back to work. So I feel personally that we need some kind of structural changes to encourage certain industries to grow, and ones that would employ people. And so one of the big tensions we have in the M&A world is M&A to create more efficiency versus M&A to create more scale and more employment. And I think that under a Biden presidency, you're going to see a desire to do M&A that increases employment. I think under a Trump presidency, he'll want that, but he really wants more profitability and more efficiency. And I think that's probably one of the big tension marks here, because if we really unleash the power of M&A, a lot of the times it actually thins out companies initially before they grow. And we don't have the luxury of that, given we have so many people unemployed. So I think this is going to be a big tension for whoever is sitting behind the Resolute desk in January.
Stephen, there's something that just building on those points, I think all very good points. And there's something that kind of struck me is I think we tend to be binary and think it's either Biden, well, if Trump wins and holds, that's that. We know what that world looks like. If Biden wins and it's Senate control by the Republicans, nothing gets gridlock, right? Nothing gets done. If it's Biden blue wave, it's progressive AOC, and not literally, but that's sort of like the fear. I think it might be a little more, it's probably a little more nuanced than that, in the sense that if it is a Republican Senate and Biden, there might be a Republican senator or two that's sympathetic to an issue like stimulus, or that they can kind of pick off, and they're not going to get the sort of widespread things they would like to get done, but they will get some things done that they couldn't get done previously under, with that Trump wouldn't do. But the other one I think is pretty interesting and leads to the question of unanticipated kind of issues. If it is a Democratic Senate, I think you're going to have some Democratic senators who are concerned about the party lurching too far leftward and doing what the Republicans did last time. And so I think you'll see some holdouts on issues, especially if it's a majority of one. I think you'll see holdouts on some issues that just say, I'm not going to go there on that particular issue or that particular issue. And so I think it'll be it's going to be really interesting to watch the sort of negotiating as they try to figure out who, and the Republicans try to figure out who they can kind of stoke, right, to try to pull them over to their side.
Well, and to your point, Dan, as it relates specifically to private equity and M&A, if it is a blue wave, we've already seen how much of an influence that the private equity community has on the campaigns and involvement with lobbying, et cetera. So even if there is a blue wave, I think there's enough lobbying effort and money going into Washington on behalf of the industry that it likely could be much harder to get some of these things done than we might all be fearful of.
I think one point I would make, though, Steve, you asked a question earlier, and I think both Patrick and Dan kind of touched on them. I think infrastructure funds are going to do very well for the next 10 years. Okay, I think infrastructure is going to clearly be one of the #1 topics because it employ people. It deals with some of the green questions and the alternatives questions, and we've been so in my opinion, underinvested there.
Underinvested, yep.
Yeah, I think financial services. I think in financial services, it's amazing. You know, Dan and I are both very focused on the sector, especially lending. I thought that the 2008 recession crippled the banks, and it gave us 10 years for non-banks to have kind of their way with that market. I think we've got another 10 years. Unfortunately, I kind of want the banks to get back into the driver's seat, but every one of these market dislocations sets them back. And so I think you've got another 10 years of innovation in financial services existing outside of the banks, notwithstanding some banks acquiring some pretty big companies. And I do think the energy industry is going to pivot. Whether they want to admit it or not, they're going to pivot green because they see that's where the world is going. I think there's a lot more.
They already are.
Yep.
Yeah.
So those are kind of 3 sectors that I think you're going to see big, no matter who is president.
Well, one topic that we've talked about a little bit, and that's certainly been front and center in the last 4 years, has been foreign trade. What do we think about foreign trade under each, of Biden and Trump? We talked a little bit before about that, but what do we think the outlook is under either one? Patricia, why don't you start with that?
Well, I think that there is an underlying issue related but separate, which is about controlling your supply chain, about the real awareness of the importance of creating jobs in America. And so I think that we'll continue to be dependent on China and other countries, but I do think there is a fresh awareness and thinking about ways to perhaps do more domestically. So I think I think that's kind of on everyone's mind.
Sasha, any thoughts on that?
Well, I think what Patricia said just hit a nerve for me as she was talking. It's like when I think about our strategic dependence on China and India for medicine, I just find it to be unbelievable. And I'm really, to build on something that Dan said, and I know we want to veer away from politics, but I really pray that Democrats and Republicans can find some common points of interest and work on some of these issues. We should not be so dependent on foreign countries for things that are truly strategic to us. I know we've always talked about steel, but I mean, 100 million people in America take blood pressure medication, and we can't rely only on India to deliver it to us, or China. So I hope we're going to find some commonality. I mean, my true hope is that something changes in the tenor of the dynamic in the legislature, and they find solutions and they bring them to whomever the president will be, and we'll start to work on building things here in America.
Well, I'm going to pause for a moment because we got a question. I'll put it out to the group. Let me read it. It says, any input on the defense budget spend, which combines some elements of healthcare and first response for COVID as well? Anyone have any thoughts on that under either election outcome?
I mean, there's no doubt, Steve, that healthcare, we have underinvested in certain elements of healthcare. And I think, Dan, between the services piece, the infrastructure piece, and frankly, the technology piece, I think we're going to see it being very hard not to make a much more significant investment there. And that's why I, again, would say healthcare infrastructure and healthcare services is a good area to look at in M&A. I think we're going to need a lot more healthcare workers going forward. And, you know, we keep hearing that we have fewer hospital beds than almost any other country per capita. So, you know, I do think we're going to see some investment there. On the defense, I'm not an expert on that one. I don't know if any of the other people on the panel have a view on the defense budget.
No, but I will look foolish and hazard an opinion. I think it's a really great question, because I think, you know, the short answer is if you assume if it is a blue wave, and that's not a prediction, but if it is, then I think you have to assume spending is going up, stimulus and otherwise, infrastructure, and then you have to start prioritizing. And defense historically is not an area that Democrats have prioritized. It's not a criticism. It's just that it tends to go in other places. So that doesn't mean it'll go down, defense spending, but I could see it flattening out quite a bit from what the trend has been historically, and see money going into other programs, you know, health and welfare, and other parts of that they tend to prioritize.
Thank you. So we have a few minutes left. Let's, if there's any questions, certainly the audience, I appreciate sharing them with us. But why don't we talk about looking into the future? And Patrick, maybe you can give us a quick view on what you think early 2021 after COVID and the election results would look like.
Yeah, I think, you know, I think we've kind of touched on it throughout this conversation, but again, I think there's going to be a lot of activity in 2021. I think Sasha mentioned it earlier. There's pent up demand from missed out activity this year. And then you have the impact of what future implications might be, whether it be taxes or other regulations. And so I think there's going to be a lot of activity in 2021. I think it's going to drive a lot of competition. So I think you're going to see purchase price multiples stay elevated, especially for those that are high quality assets that have not been impacted by COVID. And I actually think that businesses that haven't been impacted by COVID negatively or positively are going to come away as the real winners, because I think even businesses that have benefited from COVID, and once we start to get to the other side of this and you start to see a declining trend, I think that's going to negatively impact any sort of valuations that those companies might receive.
And then what would you say, and I guess I'll ask Sasha this question, what would you say is more important, the election outcome or impact of COVID in terms of M&A?
So, you know, I think that the short answer is I think COVID is the single biggest driver of the next 4 years. And I think, you know, one of the wonderful things about human beings as kind of the apex predators, we have the most programmable brain, and that gives us certain power. But what's happening is we're being reprogrammed. Things that we expected, working in offices, shopping, eating in restaurants, is all being taken away from us now. And I think as we reprogram, we're going to go back in a different way to the world, and it's not going to look the way it did. So I feel like there's certain industries, logistics, IT services, remote education, healthcare we talked about, and e-commerce in general are going to really experience a sort of, again, a second wave of explosive growth, because I think we are really pulling away from bricks and mortar in a way that we didn't anticipate. I think things like commercial real estate are going to have tremendous trouble. And I think that you know, we really need to come up with solutions for that industry. And I think at the end of the day, both of these presidential candidates are going to be faced with, where do I make my bets to help fuel growth, put people back to work, and drive up American competitiveness? And you know, I really hope that they will take it seriously, and the Congress will work with them to come up with some initiatives that build value for all of us as citizens. Because right now it just feels like it's been a tug of war and a lot of destructive obstructionism. And what we need to do, and I really hope that whoever is president come whenever it is in the next few weeks is determined, will really focus on trying to figure out some solutions that will satisfy the majority of people.
Great, thank you. And I guess maybe the final question as we look to wrap up here. And And Patricia, I think we started with you. We'll end with you. What would you say bodes well for M&A activity, regardless of the outcome of the election? What would you
I
say?
think that kind of building on Sasha's comments, that the tech application has become so embedded in every single industry and just permeated our lives in ways that we couldn't have imagined. So I think tech is going to continue to do well. I quite honestly think investing across the board for the most part is going to do well. I think that we have amazing resiliency and creativity in our investment community. And I think taxes are a given. I think increased taxes are a given. You know, we have to climb out of the hole, both at the federal and state and local levels. And so there's no easy out here. So I think we'll figure out how to deal with that very creatively, and people will figure out how to make money doing it.
Great. Well, listen, thank you. And I'd like to thank the panel.
Can I add one final thought? If you don't mind?
Please.
So just building on Sasha's point, I would just say, you know, I think the commercial real estate is going to be hurting for the next few years for sure. I'm a firm believer that 10 years from now, the world looks somewhat like it did in 2019, and it's going to be a deep chasm getting to the other side of that. But the best evidence of that to me is that when real estate prices are dropping in New York, I thought they would drop 40–50% with the amount of capital coming online. When they drop 15, investors are stepping in because they know New York's a great long-term bet. And so I hope they're right. I believe they're right, but it is going to be a tough few years in the meantime.
Great. Well, everybody, listen, thank you for your very thoughtful responses and observations about, you know, what's a very timely topic. You know, I think we all are going to be eagerly watching the events of the day, and certainly the outcome, which probably will take some time till we ultimately know the answer. But again, thank you all for your participation in the panel, and to the audience. Thank you for the handful of questions. And Lena, I'll turn it back to you.
Thank you so much, Steve, and thank you to our panelists as well. Definitely insightful and timely conversation. We do have a couple more webinars coming up, a post-election discussion of M&A. We'll see if we have a clear path forward by then. On the 5th and then on the 19th, we're going to be doing an LP focus webinar. So stay tuned for more information on that. Thank you to our sponsors and our attendees, of course. We hope to see you again soon. If you are participating in our Deal Connect, you're going to want to log out of this event, this link now, and log into the separate link that my colleague Terrence Winters circulated yesterday. It should be in your calendar invite. If you have questions, please reach out to the Opus Connect team. Until then, stay safe and stay healthy, and we'll see everyone soon.
Thank you.
Thanks, Lena.
Thanks, everybody. Bye all.
Thanks, Stephen.
Thanks.